Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to another edition of the Investing Podcast presented by Tusk Media. Real quick, do us a favor, go to anywhere you like to consume awesome, riveting, compelling information. Twitter, Facebook, YouTube, and go to .com/TuskMedia LLC. So twitter.com/TuskMedia LLC. Same with Facebook, YouTube, all that good stuff. Give us a follow if you're on Seeking Alpha. Leave mean comments about Ben. We'll definitely enjoy reading those at our end.
I need a new nickname, I think.
Yeah, we've got Lazy-Minded Ben, Sophomoric Ben. We need some new nicknames for Ben. So leave some feedback there. Today we're going to be talking about a company that I think we all know and enjoy. All the jelly fans out there know it real well, Smucker's. Well-known, family-involved, operated business. 100-year history. Ben, when you start to look at kind of the history of this company, the profile, what do you see?
Smuckers was started in 1897, Orville, Ohio, by a Smucker. A Smucker's been running it ever since, and a Smucker still runs it today. The most recent transition was when Richard Smucker gave it to Mark Smucker. Now Mark Smucker's the head. So what happens at SJM is that over time they make these acquisitions and they branch out from their jams and jellies business, and now in 2001 they bought Jif peanut butter, they bought Crisco, both from Procter & Gamble. In 2008 they bought Folgers from Procter & Gamble. In 2013 they made a big acquisition of Big Heart Pet Brands from a private equity firm. And so you don't have just the jams and jellies business now. You have a big peanut brand, you have a big coffee brand, and you have a big pets brand. And what they've done as well, in addition to that, is said probably they partner with Dunkin' Donuts, and now they have the Dunkin' Donuts license through 2039. So when you have Dunkin' Donuts K-Cups or their cold brew, which is going to be coming out this summer, you are actually consuming a Smucker's product. So that's a fun fact, but that you can bring up to people. But basically, so you have Smucker's has become a portfolio of brands, some of which are organic, but the majority of which have been acquired.
So usually when we look at companies that are rolling up businesses, whether they're in the same kind of core competency of what they're doing, they're not just buying jelly companies, they're actually buying things.
Right.
They're kind of all over the place. When you start to think about that, one of the things we always look at from an investment perspective is, are they paying good prices for these businesses, and how does that impact the company's valuation? What's the recent trend as far as that's concerned, in your opinion?
Well, it's not very good, in a word. So in the last couple of years, Smucker's has generated a return on invested capital of between 5 and 6.5%, which is very poor. It's obviously lower than the cost of capital, which in this case is about 8%. So they have a track record of making these poorly timed acquisitions. For example, you buy pretty much any business in March 2008, and you can get it cheaper 6 months later. Mm-hmm. And that's what happened when they bought Folgers. They bought Big Heart Pet Brands in 2015 with the expectation that sales would continue to ramp in the mid-single digits. Now they've had a number of missteps along the way, but all of a sudden now they're saying, we still think over the long term we'll be able to get to 4 to 5%, but that'll be supplemented with acquisitions, and so that's not organic growth. So overall, their track record with acquisitions has been fairly poor, similarly to their track record with execution in the regular business.
So when you look at those specifically on the acquisition, and I guess this kind of lends itself to the execution as a whole, how much of this is bad timing, or is there something else that's getting in Smucker's way?
Yeah, so that's a great question, because I think that you say they just got unlucky, and they still got a great brand, and they're going to make it work over time. It's going to add value over time. It might not have added present value, but that's in the past. Now we're looking for the future. We know what assets they have now. They just have to execute on them. That's what the Bulls' take is. The Bears' take is that there's something more. There's something a little more systemic, more ingrained into the culture of Smuckers. And I tend to actually be in that camp. Because while the stock is cheap, I think it's cheap for good reasons. It's cheaper than, you look at Smuckers trading at 16 times earnings, and you've got ConAgra trading at 20 times. They do a lot of Marie Calendar stuff. You have Mondelez trading at 20, 21 times earnings. And beyond that, you have a lot of consumer staples, packaged good companies trading at even higher multiples of earnings than that. You start to peel back the onion and say, okay, well, why is this actually taking place? And it really comes down to the execution, and this is a systemic issue. And the lack of accountability that management has to shareholders, to the board, is phenomenal. It's staggering. It's some of the worst corporate governance that I've seen in a large, it's a $15 billion market cap company.
So, you mentioned poor corporate governance, obviously the family dynamic, Smucker to Smucker to Smucker.
Yeah.
It's kind of how the power train has been historically. Let's talk a little bit more about the board, who's around these people and all that kind of thing in terms of how they're enabling this.
Yeah, so, that's a great word, enabling. Go down the board, you have Richard Smucker, who was the former CEO. You have Kitty Dindo, who's an accountant at a number of different energy companies, but she really was never a little more than that. She was an accountant. Lisa Long was former president of Time Magazine.
Interesting.
Good resume, but how does that apply to these making a $5 billion acquisition of a pet brands? Gary Odie, again, private owner of a plumbing products company. Paul Dolan, if you're a Cleveland Indians fan, you might know him or hate him. He's the CEO of the Cleveland Indians.
I words.
Nancy Knight, an LPGA golfer, former LPGA golfer. Mark Smucker, again, he's the new CEO. Alex Shoemate, who's the vice chairman of Ohio State University. You got to be in good with the locals, right? Have them buying a lot of jam because.
Let's hope.
Sandra Pianalto. If you watch the Fed, you'll know that she's former president of the Cleveland Fed. Tim Smucker, who's 72 years old now, but he's just staying the course. And you got Jay Henderson, who's the chair of the Chicago Symphony. So you have a lot of these. All these people, are interesting people. They're people who I would like to go on a board retreat with. They're probably have interesting stories. Are they the best people to oversee management and to represent shareholders and to sign off on $5 billion acquisitions? No, and I think that's unequivocally true. These are not the right people you want. Similarly, you go down the management team, and they've been there since the Stone Age. Everyone, even the people who aren't Smuckers. You got Mark Belgia, who is the CFO. He's been there 31 years. He was there since he was 24.
He probably married a Smucker.
Yeah, and you don't think that he has some subservience to a Smucker? If you don't think that he's in there not questioning as he should the way the Smuckers are running the business, you're totally off base, because he spent more of his life really in the Smucker family than he did not in the Smucker family. So you've got a lot of groupthink going on. You've got a lack of accountability, and that's what results in poor corporate governance, poor deals, poor execution. And the problem is, I just don't see that changing.
And that's what's interesting. We talked about this a little bit in one of our portfolio management meetings, and trying to get to the bottom of this. And in some regards, again, you look at some bad acquisitions, but an attractive group of brands, attractive names, well-known businesses.
I didn't say premier. These are like
that you would want to be a part of. Relatively cheap valuation. Looks like a prime candidate to be potentially taken over by an activist investor, something like that. It maybe shakes up the board, but there's a huge barrier to that.
Yeah, and the barrier that you're talking about is the tenure-based voting. Now, the Smucker family owns about 4.2% of the shares.
Which is not a ton.
So you're thinking, an activist, $15 billion, activists can get in there by 5-10% of the stock. not too big of a deal for someone like you think of Pershing Square, you think Carl Icahn, could really think of Janus Partners could really stage a big fight for this company. Problem is the 10-year base voting, because what happens is if you have owned the stock for 4 years, you then get 10 times the number of votes, which means that these guys effectively have 42% of the control of the business. And then if you think about what it would take for someone else to come in and actually get control, they'd have to essentially take a 10% stake, hold it for 4 years, and hope that the Smuckers didn't change any of the rules in between times before you can actually mount your takeover target. So I mean, it's just impossible to really get anything done. So then the other thing is, well, maybe someone buys the company out completely. I don't think that's going to happen either. You got Mark Smucker in there, who's 46. He just took the CEO role. He doesn't want to get out of the business. If someone was to buy this company, they'd have to pay such an enormous premium for it. There's such an amount of family pride that goes into this business. And I think there's a reason you've seen Berkshire even talk about buying Unilever before something that would, on its surface, appear to be much easier to be bought in J M Smucker. $15 billion company, but it's just not doing anything.
And it's a stay away. Again, if you have to overpay for something, for a company that's overpaying for assets as is, all of a sudden it becomes really difficult to.
You've got negative tangible book value. So mark this up as one which you do a lot of work on, but a lot of companies that may seem cheap, may seem to have value, have some hair, and if you can't find that catalyst, it becomes difficult to justify a thesis. Now you could say, well, I'm just going to hold it and collect the dividend until things turn, but in the meantime, I mean, you're talking about returns on invested capital that are serially underperforming versus other people. So I mean, are you going to tolerate that underperformance for 20 years? I mean, you have a longer time horizon than me if you're going to sit on this for 20 years. So
you're waiting out a family, and they've been around for 100 years. For all we know, they'll be here for another 100 more. That's not a prediction. Just taking some guesses. That's all we got on Smuckers. You guys have a great day. We will talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.